Okay, good day everyone and happy trading. And today we'll basically look at something that is very cardinal and very important and profitable, beneficial. It will really help us out. So we're looking about trading price action. So trading price action is basically dealing with a 1 hour time frame. Then you deal with the you do your analysis on a 4 hour time frame. Then when you drop to 1 hour, you drop to 15 minutes or 30 minutes. It's able to direct you. So the first thing we're going to look at is how to draw support and resistance. The moment we are able to know how to draw support and resistance, and the next thing that we need to look at is, are we able to identify the kind of candles that have been formed at our levels of support and resistance. There are particular zones which has got particular candles being formed in a particular way, and when we are able to identify those ones, then we are good to trade price action. So price action, you can have your analysis done on a weekly or a daily or in a 4 hour time frame. Then you can place your trades on 4 minutes, rather 15 minutes, 30 and 1 hour, or just on the same one day 4 hour time frame. So it's very profitable and beneficial. So let us get into it without wasting a lot of time. So for those for those particular individuals that are having laptops, uh, it is quite beneficial for us to trade. So there are just simple rules for you to draw support and resistance. Support is the one that is found below, and resistance is the one that is found on top. Then there can be two types, which is the ones that are diagonal and the other one are horizontal. So if you're able to find 2 points that are in a horizontal that have got highest point or lowest point in a horizontal fashion, you are able to connect them and you draw either a support or a resistance. So uh, when you try to read the candlestick trading bible, or maybe the candlestick made easy by these people that traded the forex before, or maybe you do Elliott wave theory, so it's easy for you to understand the market in that regard, in the sense of trading price action, because Elliott wave is all about price action, candlesticks is all about price action. So with Elliott wave, you basically have certain patterns. So it is easy to trade that. But with the price action as well, um, it is also easy to trade, but it does not have a form of restriction that Elliott wave has. So in fact, Elliott wave is even price action, but the thing is, that's got just certain patterns that are tradable under Elliott wave theory. So for those people that are interested in learning price action, it is important that you make sure that you soldier on, you look for books, so that you are able to know price action, because it is the mother and it is the king of the FX market. So everything falls into place, because everything will fall under price action. So price action will also determine what happens on a 1 minute time frame. So price action is simply the behavior of an instrument being traded in a specific time frame. But in this case, it is 4 hours, 1 hour, and a bit of 15 minutes, and uh, going upwards. And then when you move away from weekly and you go to monthly, that is what we call swing, right? That is what we call swing. So when I look at this particular chart, or when you read the candlestick trading bible, you realize that there is what they call the market structures. Market structures is simply the patterns of the market. Under market structures, they will tell you which markets are supposed to be tradable and the ones that are not tradable. So for people that will just do the 1 minute time frame without looking at what is happening on a 4 hour time frame, you realize that that particular day there will be a series of spikes. Why? Because the market is falling on a 1 hour on a 4 hour time frame, or on a weekly time frame when it's falling. So you have unusual spikes. So for those people that don't trade spikes, it will be difficult for them that week throughout. So when you know price action, you look at the 4 hour, the weekly, and the daily, you'll be able to know what is tradable in that particular week. You know the market structure. So we'll show you what the market structure is. Market structures, there is what we call the choppy market, there's a ranging market, and there's a trending market. A choppy market is a market that has got a lot of noise and they are not tradable. It has got a bandwagon of noise and not tradable. Then there's a ranging market. Ranging market is a market that is moving from one zone to another, basically not breaking certain zones. And then there is what we call a trending market. A trending market is a market that just is either going downwards or upwards. In this particular case, you have this market that is just slanting. This is what we call a ranging market. And there is a way in which you can trade a ranging market, and there is a way in which you can trade a trending market, right? So let us look at a bit of a ranging market that is tradable, and we learn how to draw the support and resistance. So support is the one that is found below. And how do we draw it? So we need to look for levels that we can refer to as the lower low and the lower high, or a lower high and a lower low. As long as we are able to coordinate 2 points, two low points, either in a diagonal fashion or in a horizontal way, that is not a problem. So as long as we're able to coordinate the two of them, or 2 or 3 of them, that is even better. 2, 3, 4, 5, that's even better. So in this particular case, what I'm looking at, I think this is a horizontal. No, not really horizontal. These are diagonal ones. So let us look at the diagonal ones, and we try to draw the support and resistance. So we said support is the one that is below. So when you press your screen, then you see your shapes there, the circle, the square, and the triangle. Then you pick the fashion that we want. So if you want to add some more, there is a plus symbol there. But here I have what I want, which is the diagonal one. So you coordinate 2 points. You start here, then you coordinate it to the other one there. Okay, you coordinate it to the other one there. So if you want, they can protrude. If you don't want, they can protrude. But I want them to protrude, and most times we want them to protrude is because we are looking at a situation whereby the market will again come and bounce on these levels, so they have to somehow protrude. So as long as you can see 2 points that are able to coordinate, that is fine. You have to draw them. You have to draw them. I always tell my guys here to say the best is you have to have two support and resistance that so the 2 of them that I've just drawn here, referring to them as my support. All of them, they are support, right? So I'll draw my resistance. So there is not I'll even put them in different colors. So I'll touch this level, okay, then I'll also touch that level, right? Touch that level. So the one I'm going to put in purple is, I'll refer to it as my first support, then the other one that will remain in white will be my second support, right? Okay, so then let me draw my resistances. We'll do the first one. How many lines am I able to connect? So in this particular case, I've got the higher high and the higher low and the higher high, like that. Then I need the one in white. The white one doesn't have it should also have a resistance. Okay, like that. So this one must definitely go to white. Where art thou? Here, to take it to white, so that you see that these are really a little bit different, like that. So I'm just drawing things as long as I can coordinate them. So there are a lot more that I can coordinate, right? There are a lot more that I can coordinate, but I don't want to have a situation whereby the people that are trying to grasp it, they find it a little bit difficult and think this is the only way it is done. So this is not the only way it is done. I'll be able to show you screenshots of other patterns that come as a result of drawing support and resistance. So you're looking at these levels. Then the best way to trade is, I tell people, is when two support and resistance they meet, and we need to look at 2 or 3 candlesticks. According candlesticks, when you look at them, you go back to the book for candlestick patterns. Then you try to find if if that pattern that is being made there is tradable. Okay, if that pattern that is made there is tradable. So the price action, okay, we'll begin with this one. Let me just point it, then I'll zoom later. We'll begin with the one that happened here. Was this thing tradable? So we'll look at it. Let's try to zoom. We zoom in, we zoom in. According to my understanding, this is very much tradable. This is very much tradable because you have I'm able to identify this small this small candlestick. I know why it got formed like that. So this is what we call a doji. A doji is basically something that it has got the wick, the upper wick and the lower wick, and then the real body, which is in horizontal, is basically the opening price and the closing price is very close, or there is nothing at all. This represents an indecision and a tug of war between the buyers and the sellers. So what happens is it is the rejecting lower levels, and what happens is after the rejection, because the sellers were in control and the buyers are the sellers are now rejecting the prices and the buyers are rejecting the prices. But because it has gone so low, you find that it will bounce and go up. It will bounce and go up like that. So this is the one that went like that. This is the one that went like that. So you have a support and resistance. So how do you know that this is your take profit? Because you already have a support and resistance that touched this level. Okay, it first of all touched this level, then touched another level here, but because you draw it in a protruding fashion, so this is where your take profit is. So the moment it hits just this level, it hit this level, this is your take profit. So trading price action is quite easy. So let's try to go back and see another one which was tradable. So another one which was tradable is here, right? It is here, here. Okay, there is something happened there. So let us check if we can trade it, if we know the pattern that is being formed here. So I've just deleted the worst. I've just deleted this support and resistance. need something else. I need a trend line. Okay. So it touches that level and touches this level like that. Okay. Let's take it to, it is supposed to be purple. Purple. Okay. So we're looking at this level. So let us check what happened here. So the moment we check what happened here, if we're able to identify the pattern that is there, then it is tradable. Okay. Here. So you have here this candle here is what we call a hammer. So when a hammer behaves in the same fashion as the other one that I referred to as a doge. So after I do this one, after we check out this one, I'll also go to the book and show you that there are a lot of patterns that happens at these levels that show you that the market is reversing. So this is how you trade. So this pattern, it is characterized by a long wick. So this is also represents a rejection. Now the real body starts from there and then closes from there, but the wick or the tail or the shadow is longer than the real body. So what happens is this is happening at a point where you have support and resistance. It means that the market has reached a point whereby there is tug of war and there is indecision by the sellers in this particular case, and there is a reversal because the buyers have taken over. Right? So the moment you're not able to identify what is there, so the best is you don't trade it. So let us go to the book, right? Let us go to the book. So the moment you're just able to draw the support and resistance, and to know that I know this pattern how it behaves. I know these candlesticks how they behave. Sometimes it can be 2, 3. Sometimes it can be just 2 candles. And then when you see those 2 candles appearing, forming at the support or at the resistance, you know that the market will behave like in a particular way. Because so this is the one that is forming. If I'm to wait for this candle to finish, this is a sell because I know how they behave. Okay, so let us go to a book that I use where we get this information from. So the moment we look at my particular book that I use, so it is very easy. It's called Candlestick Made Easy to look at that. So this is the first one that we looked at, but I think let me begin with the hammer. So we had the hammer somewhere. This is the hammer. This one. Okay, so we said so let us just read what is there on the book. So they are saying a hammer is defined by a candlestick with no upper shadow or a little upper shadow and a lower shadow at least 2 times the size of the real body. Should the market be going in a bullish trend prior to the hammer, this indicates that the market is rejecting lower levels and the bottom reversal is about to happen, right? So let us look at also the doji. So the doji is this one where I've just circled something. Let me just recycle freehand here. So this is the doji. Like I told you that this is the doji. So what is a doji? A very tiny real body which looks like a horizontal line. This represents when the open and the closing and the close are the same, or very close. The length of the shadow can vary. A doji conveys a sense of indecision or tug of war, and when buyers between buyers and sellers, right? Like the spinning top. The doji is a reversal signal. The lack of the real body signifies that the current price changes will hit equilibrium and are now starting to reverse. Okay, so let us go back to our chart. Let us now confirm that what I was talking about is really true. Okay. Okay. Like we said, the body is very close. Look at this small one. Okay. Look at that small one. The body is close. It has hit the equilibrium and it's about to reverse. Okay. Okay. Let's look for the hammer. Let's look for the hammer. That is the one. That is the one. Okay. The body, the wick is 2 times longer than the real body. So let's just look at just one aspect. What is the real body? What is the real body? What is the real body? So my book still provides will still provide something like that. So for those that haven't really studied what candlestick are, so here you understand to say if this is a buy, this is a buy candle. It means that you have the price opens from there and closes from there. Okay, and then this is your shadow, your lower shadow, your upper shadow, lower shadow. This is your opening price. This is a green candle or a buy candle, and then closes up there on top. Okay, so if if um if at all this was a sell, it means that it will mean that our opening price is there. It is just the opposite of the buy. It means the opening price is there and the closing price is there. Then the rest remains the same. So this is how you trade price action. So we have a lot. I have a lot of them. Look at that. There is the hammer, long upper shadow, tweezer bottoms, piercing bottoms, dark cloud cover, bullish engulfing, bearish engulfing, morning star. We have the evening star. We have the shooting star, black three cows. We have bottom, tower bottom rather. Then there's the tower top, and then we have the flying pan bottom, dumping pan, a dumpling top. Then we have the recorded session lows. Then we have a bandwagon of them. So very easy to trade, as long as you have this kind of book. So this is Raffle, or rather, yeah, this Raffle is also my name. This is Hasho signing out.